Now let's have a look on the financial journal. So the financial journal is actually the transaction to record the amount of the transaction that will be in the debit and credit statement. So for the asset, when they increase, then it will increase in the debit side, and when the value decrease, then it will record in the credit side. And then when we talk about the liability will be increase in credit and decrease in debit. Also for the equity, revenue, and the expense, all of them will be increase in the credit and decrease in debit. So the financial journal will be recorded from two sources. The first source is from the logistic and HR transaction, when there is a asset movement. So for example, when there is asset changes, example in case of the purchasing transaction, example when we do the purchasing raw material, so the financial journal will be debit for the raw material inventory, because the raw material is the asset. So that's why when the raw material inventory increasing, then it will be recorded in the debit side. And example when we pay using bank, means the bank will be in the credit side. And then there will be another financial journal when in case of asset added, or when there is a revenue. So when there is a revenue, example when we have a case of sales invoice, so the debit will be record of the account receivable, which is the customer liability to the company. And because it's also included in asset, that's why the AR will be in the debit side. And because the revenue added, then it will be in the credit side. And then in case of there is reducing in the asset, let's say when we want to pay the expense, so in case of there is a salary expense, so the debit will be the salary expense, because when there is increasing in the salary expense, then we will record in the debit side. And when there is reducing in the asset, then it will be in the credit side. Okay, so please remember of these three things, because when later on when you make your business process, and when you find out there is a process that there is a movement in the asset, whether the asset changes, the asset added, or the asset reduced, then please remember to put what is the financial journal for that particular process. So example, when we're talking about creating the sales order from the customer, so when there is a sales order from the customer, there is no asset changes, because the sales order just a transaction when we record what is the requirement from the customer. But in fact there is no inventory movement in that sales order. But by the time we do the outbound delivery, let's say when we want to sending the goods to the customer, it means that our asset already reduced, because our inventory is reduced. So it means there will be a journal whereby the debit will be the cost of goods sold and the credit is our asset, which is our inventory. So uh, these three things actually you need to remember. So please remember, in terms of purchasing transaction, when we pay using bank or cash directly, then you need to remember that when we buy something, example, when you buy a car, actually your asset is only changes, right? So the asset is changes between the cash become a car. So the same things when we buy the raw material here, the journal will be changes between the bank and the raw material. So the bank reduce in the credit, and what we gain is a raw material. That's why the raw material increasing in debit side. But then in terms of when we get something or when we gain something, it's mean when we get the revenue. So we will put that in the asset will be in the debit and the revenue will be in the credit side. And in terms of when we lost something, or in terms of the expense that we need to pay something, so we need to put that expense in the debit side, and the credit will be and the credit will be filled up with the asset. Okay, so this is the three things that you need to remember later on when you do the creating the business process. Then you need to make sure whether the process having these three things or not. And then the second source for the financial journal is actually from the finance itself. So in terms of the petty cash, so the petty cash here is like the small bank, or sometimes we call in Indonesia is kas kecil. It's like when sometimes when you want to pay the small cash, let's say you pay parking, let's say you buy mineral water, you buy the paper, maybe only buy one box, so you don't need to use the bank account, so you use the petty cash. That's why the petty cash will use to record when you have the expense, which will be in the debit, and the credit will be the petty cash itself, because your cash is reducing. And then when we talk about the second is about the bank statement. The bank statement is actually the reconciliation between the bank between your money position between the enterprise money position and the money that recorded in our system. So example, by the time the customer pay in the bank, so the amount in the bank is increasing, but in our system the money haven't increasing. So that's why we need to have a bank statement reconciliation, whereby we will make the value same between the amount in the bank and the amount in the system. So that's what we call with the bank statement. The amount in the bank statement in the bank and in our system might be different, so it's possible, let's say in terms of there is a customer payment, it's mean that the amount in the bank will be greater than our amount in the system. But in when there is a case when we need to pay something through our bank, it's possible that our money in the bank is already reduced, but our money in the system not yet reduced. That's why we will use the bank statement reconciliation. So usually the step is we will download the bank statement from the bank, it could be found in the internet banking. Usually the file download will be in the CSV files, and then we can upload into our systems in order to make it the value the same. And then uh, the third transaction from the finance is when we do the manual posting journal. So it's possible that, let's say we have kind of transaction that we that not posted from the logistic or HR transaction, because that transaction is only occasionally happen. Example, when let's say the owner want to withdraw the money from the enterprise. So because that transaction is not often happen, so that's why we not setting uh, any transaction from the HR transaction or from the logistic transaction. So instead we will use a manual posting journal, whereby when we withdraw money, it means that our money in the bank is reducing, and it's reducing because we want to take it as an equity owner disposal. So that is the financial journal posting that might be happen in the system. So next we go to the management, or sometimes we also can call it as an accounting process. So the difference between the financial and the accounting process is usually the people saying for easy is the financial will produce a report for external, and the management will produce a report for internal. But the thing is, actually, even though that when we talk about the financial processing, even though the report produce like the balance sheet, income statement, and the cash flow, it's true that the external parties, whenever we want to have a working agreement with them, let's say we want to have a working agreement with the bank, or with the creditor, or with the debtor, of course they will look into the finance statement, they will look into the income statement, into the balance sheet, into the cash flow, to have a look on the financial overview of the enterprise. But doesn't mean that those reports is only used by the external reports, only used by the external parties, because actually those report is also useful to the management itself to have a good strategy. So that's why when being asked what is the difference between the financial and the management, or what is the difference between financial and the accounting, is actually the financial is actually related directly with the logistic and the HR transaction. So whenever there is a process business transaction, then it will be recorded in the financial side or in the financial statement. But the management or the accounting side is actually used to analyze the report produced from the financial. So the order of the transaction will be, the logistic transaction will be run, and then it will be collected into the financial statements, and then the financial statement will be analyzed into management or accounting process. Okay, so let's have a look on this incoming statement. So this income statement is actually taken from the financial activities, right? Whereby this income statement is actually also produced when there is logistic transaction. So if example there is no sales transaction, there is no inventory movement, of course there will be no incoming statement as well. But because there is a goods movement, there is a sales from the logistic part, so that's why this incoming statement can be produced. But now the thing is, when we only stop until the incoming statement, then when we look into this income statement, then we only can see, okay, our revenue is 1000, our expense is 700, so our company is profitable as much as 300. But then in the management, actually we can do the first purpose that can be done in the management control is actually the profit center accounting, whereby the profit center accounting can compare between the plan and the actual budgeting or target. So let's say we can set our target for revenue is 1500. So if our current revenue is thousands, it means that we are behind our target. And also when we talk about the budgeting, it's mean that let's say our budget is 1000, but now our expense is only 700, then it means that we are also under budget. That it can be good, it means that we can saving our money, but it's also can be mean that we maybe some of the program or some of our strategy is not run well. That's why our budget is not used to the maximum. So using the management control or using the profit center accounting for we can compare whether our revenue is already achieved our target or our expense can already reach the budget or under the budget. And also we will have the profitability analysis, whereby we can having a more analysis from this income statement. Example, if our company having a branch in Asia, Europe and US. So when we look into the income statement here, the total revenue is 1000, but we can split when we do the profitability analysis. Usually we can split based on the branch, or we also can split based on the product. So example, we want to know which area, which branch is more profitable. So if we look into this, that we can see Asia revenue is 300, Europe revenue is 500, and US revenue is 200. If we look into this, then it means we can get an insight that our revenue, the biggest revenue, is actually taken from the Europe side. But we cannot stop until that information, because we need to continue into the expense as well. So if we see here, the expense in Asia is 150, and the expense in Europe is 550, and the expense in the US is 50. So if we calculate the profit, we find out that the Asia profit is 150, and the profit in Europe is actually loss 50, and the US side profit 150. So it means that if we only stop until the income statement, we only get the the whole overview that our company is profitable. Okay, but actually if we have a look into the profitability analysis here, you can see that actually we are losing in the Europe. So even though Europe having a good or even the highest revenue, but in reality actually there is more expense in Europe also, and it caused the Europe become loss. So we can get more strategy here that actually we just can stop doing the operation in Europe. So because let's say when we stop the the transaction in Europe, the sales transaction in Europe, so we can get the profit more. So that's why it's good to have a profitability analysis, because by using this, then we can get more strategy in this level. Okay, so that is the process in the finance and the accounting or in the management. So we will continue into our discussion and Odoo configuration. Thank you.